New York Stock Exchange, we're in wait-and-see mode. Of course, all eyes are on Washington, D.C. ahead of President Donald Trump's announcement regarding the tax plan. So joining me now is Jonathan Corpina of Meridian Equity Partners. Jonathan, great to have you here today.
Good morning.
Well, of course, all eyes are on Washington, D.C. We're awaiting details of the plan. Now, earlier today, Mnuchin, the U.S. Treasury Secretary, announced that we will be getting that corporate tax plan. But given the finer details, what do you expect to see in terms of the tax plan and equity market reaction?
Right, so clearly, like you said earlier, we've been waiting for something to come along. So I think there is some excitement. There is some anticipation as to what exactly we're going to see. I think the market is going to react somewhat positively to some of the concepts that are here, because the overall concept is trying to save individual tax money. Corporations are going to be able to repatriate money and bring it back to the United States. That will be an influx of capital here that would help our economy, and it'll really trickle down to many different areas. So overall, the market, I think, will react in a positive tone, just because we're getting more information. We're getting a little bit more transparency. The debate of whether this is the exact plan we're going to see down the road, is this going to get passed? How is Congress going to, what areas are going to oppose this? So I think that's some of the bigger issues that we're going to, that are going to lie ahead of us. But as for right now, I think it's good that we're getting just some information as to what this plan might look like.
And John, we know that any sort of reform or overhaul does take time in Washington, D.C., so we'll have to wait and see. But at least we'll get a clearer idea later on this afternoon. And we can't forget that it's earnings season. We've been seeing some breakouts in terms of companies and their stock prices. Now, given that we saw the NASDAQ hit new record highs again, do you expect to see any more breakouts?
I do expect our markets to continue in this upward trend that we've seen. Putting what's happening in Washington aside, we've got our normal economic calendar of our data that we get. We're in the middle of earnings season, or getting close to the middle of earnings season, and there's been no major negative headlines that have gotten in this way of the market. So I think any catalyst that we've been seeing or expecting has been more on the upside than on the downside. Yes, it is a little bit about managing expectations as to what the next month and the next quarter is going to look like, whether we're talking about corporate earnings or whether we're talking about what our tax transformation is going to look like. But that being said, overall, I think we have to continue to look for headlines that are coming about North Korea. That could be something that could put pressure on our markets. Interactions and relationships with us in China. We continue to talk about what's happening with ISIS in Afghanistan. So those are three kind of negative things. We'll throw French elections on top of that too. So many other different things that are going in Europe. So there's a lot that's clearly happening here. But overall, if you look at what's happened over the last 6 weeks, there have been definitely headlines out there that could have helped our markets or held our markets back, and they just haven't yet.
John, well, I'm glad you brought up the geopolitics as well as politics, because going forward, we'll need to pay attention to that. We've seen some of those risk events play out in the currencies markets this week, if you're watching the euro against the dollar. But since today is Wednesday, we did get the EIA figures out. Initially, we saw oil trade higher, but the overall picture, we're still combating bigger supplies in terms of U.S. inventories, and we'll still have to wait and see what OPEC does in terms of extending its production cuts. But now that we're awaiting driving season here in the U.S., what do you expect to see?
Oil trading around this $50 a barrel level, I think people feel somewhat comfortable with it. We've seen it on technical levels. When we've dropped down into the low 40s, it bounces right back. When we get to 56, 57, 58, it retraces right back into 50. Yes, we are getting into driving season coming up, so I think that always plays a part into it. And we're clearly watching any headlines that are coming out about Saudi Arabia and oil production and OPEC and how that all kind of translates together. So right now, I think I think people are a little bit comfortable right now where oil is kind of right in the middle range of what we've seen for quite some time. It's just a question of, can we stay here? Can we keep it here? But I would think that the combination of Saudi Arabia output and additional driving by consumers is gonna keep it in a good range for now.
Okay, well, Jonathan, thank you so much for joining me on Wednesday, and as always, thanks for insight and analysis.
Thank you very much. Have a great day.